Today we're going to be talking about the top 7 beginner investing mistakes to avoid. Investing can be a great way to build your wealth over time, but it's important that we make smart decisions and avoid these mistakes that can cost us a lot of money. I am Tiffany Thomas, a financially free millionaire. If you want to become one of those, make sure and hit that like button and hit the subscribe button, and we're going to dive right in. All right, let's talk about these top 7 beginner investing mistakes to avoid. We are going to discuss how much risk you should be taking. We're also going to talk about the number 1 item that people get wrong a lot, and it costs them quite a bit of money. We will also talk about setting up an investing plan and what to definitely steer clear of when investing. And following how other people are investing could get you into trouble. And we'll talk about the 2 main factors that control the market and how you can use those to your advantage. And I'll also share my own personal investing mistake. The top number 1 investing mistake that beginners make is not understanding their risk tolerance. Risk tolerance is the amount of risk that you can handle when investing without feeling uncomfortable. And of course, investing is a little bit uncomfortable, but if we are so uncomfortable that we are going to make mistakes with our investments, then that is going to be too high of a risk tolerance for us. If you are investing too aggressively, you may end up losing more money than you can afford. On the other hand, if you are investing too conservatively, then you may not be making as much money as you could. So make sure to understand your own risk tolerance before investing. Comment below and tell me if you have heard of someone that has invested way above their risk tolerance level and ended up losing a lot of money. I know I have heard a lot of stories like this, and I remember one in particular. I was at church with a girl and we were discussing finances because I told her what I did for my business, and she had said she does not like the stock market. She was told to invest her money in the stock market, and I'm not sure of her exact scenario, but she put her money in the stock market, and shortly after it tanked. And she freaked out. She immediately sold all of her investments and said she would never get into the stock market again. And by doing that, she locked in all of those losses, and of course the stock market came back up. So if she would have just left her money alone, she could have seen a high return on her investments. But because she invested above her risk tolerance level, she freaked out and lost a lot of money. So make sure and understand what your risk tolerance is. Mistake number 2 for beginner investors is not diversifying your portfolio. Diversification means spreading your money across different types of assets or investments, so you're not just invested in one certain investment. This helps you reduce your risk and protect your portfolio from the market fluctuations. If you invest all of your money into one type of asset or even just one stock, you could lose everything if that asset or stock performs poorly. So make sure that you do not have everything invested in just one company or one asset. For me personally, I like putting a lot of my money into an index fund, and I talk about this in another video. I will leave a link to that above, and you can check that out later on. And part of my investing strategy includes investing in real estate, in physical properties. So I have those assets, and then I also invest in the stock market. So I'm diversified that way as well. Make sure and be careful that you are not putting all of your money into just one asset, because even if you think that is going to grow over time, something could happen and it could not grow over time, and then you are out your whole investment. Mistake number 3 that beginner investors make is trying to time the market. This is what costs people a lot of money. When people are just beginning to invest their money, they have this attitude of, well, maybe I should wait or hold off a little bit longer. Maybe the stock market is going to go down and I should hold off. But honestly, we do not want to focus on timing the market. We want to focus on time in the market. When we get our money invested, it starts working for us right away. Even if the market goes down shortly thereafter, we know that the market will always continue to come back up. And of course, it's not a smooth ride. It goes up and down over the short term, but over that long term, it is going up. And I get that it is hard to see your investments go down shortly after you put your money in the market, but if we can keep a long-term mindset, we are going to be really successful with our investments. Mistake number 4 is not having a plan. Before you even start investing, you should map out a plan on what you want to achieve with your investments. Setting different investment goals, knowing your risk tolerance, and what your investment strategy is going to be really helpful before you put money into the market. And this This plan should be based on your own personal financial situation, not on someone else's plan. And it should be flexible enough that you can change it over time as your financial situation changes. And if you want help setting up this plan and actually investing your money, I have a free masterclass that I have created about the stock market and about my group coaching program. I will leave a link to that below in the description. You can click on that and watch the free masterclass and get more information about how to do this. And number 5 in our top 7 beginner investing mistakes is paying high fees. You can be paying high fees with the investments that you're actually choosing, and you can be paying high fees if you are using a financial advisor. And I have another video breaking down how much people really pay a financial advisor. So I will leave a link to that above. You can check that out later on. But it is a significant amount, and people don't realize how much they are really paying their financial advisor every single year. And when you are choosing your own investments, you want to take a look at the fees associated with those investments and make sure they are as low as possible, because even just a small 1% fee will add up to a significant amount over time. It can cost you years of retirement. And I didn't actually realize this until I started diving into investing more and learning more about the charges associated with investments. And before, when I was using my old 401k rep at my old job, and for me personally, I didn't realize how much I was actually paying in different fees when I wasn't doing investing on my own. So before I started researching and helping other people invest their money, I was actually paying a lot of money in fees. And once I realized that, I switched out of the provider that I was using and started using Vanguard and investing in the funds that had really low fees associated with them. And I am really glad I did that, because I know I have saved thousands, if not hundreds of thousands of dollars over the years now. Investing mistake number 6 that beginner investors make is following the crowd or following a hot tip that they might receive. This is a huge mistake, because if you're just following the crowd, you're not really understanding what you are investing in. And if you're not understanding your investment, you don't know when to get out or if it is actually performing well. And I have friends that have told me, oh, you should definitely buy this stock right now, it's super hot. And I'm thinking, I don't know anything about that stock, let alone the industry that stock is in. So I'm not going to make that investment. I will stick to things that I know and understand, because that is how I get really good returns. I invest in things that I understand. Make sure and do your own research and feel comfortable with your investments, because you are going to be a lot more successful that way. And I want to share a personal story with you. When I bought my very first individual stock, I didn't really have any idea what I was doing. So I went to some random blog and they had recommended a hot stock. And so I thought, okay, well, I'll just buy it. I don't know what I'm doing, but he's recommending it. And he seems to be a well-established blogger. So I bought that stock. And after I bought it, I thought, Tiffany, what are you doing? I don't even know anything about this company. And then the more I started to think about that, I also started to do more research. And I thought, you know what? I can do research on the companies that I want to invest in. And that way I can feel more comfortable, like I said before, with my investments and not feel worried about what I am investing in. Since buying my first stock, I have changed my strategy and feel a lot better about that and have made really good returns on my investments. Number 7 in our top 7 beginner investing mistakes is letting emotion drive your decisions. The stock market is based on 2 main emotions, fear and greed. When we succumb to those emotions, we are not going to be very good investors. We want to make sure that we are analyzing our investments beforehand and realizing why we are investing in those certain investments and feel comfortable with it. And then ignore the fear and greed, because those emotions can cause you to make impulsive decisions and then regret those decisions later on. It's important that we stay disciplined and stick to our investing plan, even when the market is fluctuating. When I have done that, I have been a lot more successful with my investments. Comment below and tell me if you have made any of these beginner investing mistakes. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel, and hit the little bell to get notified on when I post new videos. And if you want to watch even more content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.